Hi, good afternoon. Welcome to Think Beyond the Keys. I'm Melvina Fredson-Cole, your realtor and loan officer. I hope everyone is having an amazing day. And today in Think Beyond the Keys, I will be speaking to veterans. Yes, next week we have Veterans Day where we observe and we thank all the veterans, that have they actually put their lives in danger just to protect our country and to serve us. And I was thinking, it takes a special kind of person to know that they're going to go on and they're going to go and serve, knowing that they may lose their life, and giving all that much. So all the veterans out there, thank you so much. Appreciate you. And I was speaking to a colleague actually who is a veteran, and he told me that he didn't know about the veteran home loan benefit when he got discharged. There were benefits he didn't know about. And also, I was listening to about at least two other veterans, their own testimony, and they said that they didn't know about the home loan veterans even after their first purchase. So I was thinking that, in honor of Veterans Day, I will be doing a two-part series for veterans, this today and next week. I will be speaking on the home loan benefit, which is the VA loans. I know that you've been hearing about that. If you know of anyone, or if you are a veteran, share this. It's just to bring information that there is a benefit for you out there to help with home ownership. So this is going to be two parts. This week is going to be the eligibility. What is the home loan benefit and eligibility? And next week, we're going to go right deep into the loan itself. So just to get it started, the Servicemen's, I think, Readjustment Act of 1944, that was what made the home loans and the educational benefits for veterans. Yeah. So that was in 1944. And what does that mean? Now, it means that the Veteran Affairs, they guarantee 25%, up to 25% for veterans to purchase their home. Now, why is this a big deal? Now, it is a big deal because we all know to purchase a home, you need to put the skin in the game, right? You have to have some kind, your own money. Most conventional loans, not most, conventional loans need at least 3% down. And like FHA needs like 3.5% down payment. Now, at least. Now, if you put anything for a home loan less than 20%, we know that we incur what is called mortgage insurance. Mortgage insurance is an added money you pay, premiums you pay monthly, in addition to your home loan and in your mortgage, in addition to your mortgage, that kind of it guarantees, it helps the lender if in case you default in a loan. For example, you have lender A comes up with a conventional loan and put 3%. Now, if anything happens and they default on their loan, that insurance assures them that they will be compensated for the loss of going through the process of selling the home and trying to get their money back. Now, what the VA loan is, it says, you know what, we are going to guarantee our loans. We guarantee you, the lender, lend our veterans. We are going to guarantee you 25%. And that helps the lender, says, okay, if they default, I have up to this to help me with, closing costs, whatever it takes to sell the home again or me to get my money. So that's what it is. And they guarantee that. So the first thing for loans is who is eligible? Who is eligible for the VA loan? Great questions. Well, you have any veteran, whether you're in the Army, Navy, the Marine, Coast Guard, Air Force, and even if you're in the National Guard or Reserve, the National Guard or Reserve, you have to have served I think at least 6 years in service. In order, you have to have complete 6 years in order for you to be eligible for that. And some people, some of the National Guards and reserves, they are not otherwise eligible for the loan guarantee program that's out there for them. So they can take advantage of the VA loans. So that's for that. However, you have to be honorably discharged. Yes, you have to be honorably discharged. And there are other requirements also. Generally, during wartime, you have to have served 90 days or more. And during peacetime, you have to have served for about 181 continuous days in peacetime. And if you're in active duty, it's 24 continuous months. So if you're active duty, whether you've been discharged, you can apply for the VA loan. And I'll talk more about that next week, because VA spouses, you also can qualify for that, and I'll give you the requirements next week. But basically, that's what it is. Now, I'm going to give you an example of what it looks like. Why is it important? It's not the fact that you not only don't have to come up with a down payment. So if you do not have it and there's zero money, you can own a home because they guarantee you that, and so you can come up with zero down payment. You can also, and that eliminates the private mortgage insurance or mortgage insurance that you will have to be paying upfront. I mean, every month until your loan goes down to the 80% mark, which is a lot of money. And so I'm going to give you an example. Let me say lender comes in and wants to purchase a home for $500. I wrote this down, so I mess up figures here, so bear with me. All right, let's say a lender comes, a homeowner comes, wants to purchase a home, a buyer comes, and so purchase the home for $500,000. Sorry, I can't speak today. And then the veteran comes and they also want to purchase a home in the same neighborhood for $500,000. Now let's see how that looks like for both of them, right? Now the lender comes with a conventional loan and they need to put down 3% payment, right? At least 3%. So they didn't have obviously the $125,000 for the 20% down payment. So they only have 3%. So they said, okay, 15%, $15,000 they put down on the loan. Now I'm going to assume a regular 3% interest rate for 30-year mortgage. Now they are going to pay $2,044.80. However, that's going to be their monthly mortgage. However, they're going to pay in addition mortgage insurance because they only put down 3%. So mortgage insurance ranges about, I think, around 0.5 right up to, it depends, maybe 1.2% of the loan amount. So that's what you calculate it on. And then you divide it by by 12, which will get your number, your monthly mortgage insurance. So for this scenario, the mortgage insurance, I worked it at 0.85%. So we're adding, in addition to the mortgage and the principal and interest, we're adding $343. I'm sorry, and 54 cents. So the mortgage, the principal and interest plus the PMI, the non-veterans lender will be paying $2,388 per month. I didn't include taxes. I just do that. So keep that in mind. The non-veteran for that's the home for the $500,000 with 3% down, and they're paying $2,388. Okay, the veteran comes in and says, yes, there's another home, $500,000, same home, type of home, but it costs the same amount, and that veteran does not have a down payment. So the VA loan program, the realtor or the lender says, you know what, you can take advantage of the VA loan program. And, they go through the qualification. I'll talk to you about that in a minute. But they qualify. I'm like, okay. So the lender says, all right, I can loan you this money because the VA, they have already guaranteed 25% of that, which is $125,000. So Veteran comes in with no down payment, they get the loan. Now, they do not have to have a down payment, but just a quick note, they have to pay funding fee. Yes, the funding fee. And the funding fee, I think it's 2.30% additional. Why? Now, the funding fee is charged by the VA program and is used to run the program. Does that make sense? Because you're going in with zero down, and that's the program, they need to run it. And if you default, they need to guarantee that and everything that goes with it. So there is a funding fee program for the VA loan. However, there are some people that may not need to pay the funding fee program, and those are those in disability or Purple Heart or some other reasons, which I'll discuss next week. But some people may not have to pay the funding fee, but majority will have to pay that funding fee. Now, coming back to our example, no PMI, but they have to pay the funding fee. The funding fee is 2.3%. So they add 11,500 on the 500,000, right? Cool. And that's what they have to pay. Now, I am going to compare apples to apples. So let's say it's the same 3% interest rate, 30-year fixed rate, just like Mr. Conventional loan over here with Mr. Non-veteran over here. And then you work it and the veteran comes up even with the $11,500 fee that they have to pay. Because just a quick thing, the reason why I added that into it, some people cannot come up with the funding fee. If you cannot come up with the funding fee, you can add it to the loan. So you see how this is a benefit where most veterans can purchase a home. There's no excuse. There's no down payment. There's a funding fee. If you can't get the funding fee out of pocket, it can be rolled into the loan. Now, for this example, I rolled it into the loan just to let you see how you can benefit from this program. Okay, so when you calculate it, you end up paying $2,156 a month, which is a $231 monthly. And this is exactly this, everything that's exactly the same. Most likely for veterans, for the government, you pay less, a little bit less interest rate. So you would even save more. So that's only on a monthly savings. Remember, the non-veteran is paying for the same amount, 2,388, and you're paying 2,156. So that's saving right there. So there's no down payment. There's no private mortgage insurance that you have to pay. I'll speak more on the fees and everything next week, but there are limited fees too when it comes to closing costs and all that kind of stuff. So this is just to tell you, like, this is a benefit that you can take advantage of. Okay, and there's a lot of people that are not taking advantage of this benefit because they don't understand it, and there are a lot of people out there that, because they don't understand it or even don't know it exists, they don't use it. So what you need to do, you need to get a team together. You need to get a realtor and a lender. Hey, I'm here. Who understands your situation, because we understand that you may be moving, you may have different assignments, to move to like here 3 years, or a compassionate assignment, or a permanent relocation, or whatever the case may be. But it is something that we can have a plan of action for you so you can take advantage, because home ownership also means that you are building well. Yes, you're building well. And there are ways that we can work for you for your particular situation, depending on, because for example, let's say you purchase a home in an area and in 3 years you have to move again, but you want to also move with your family. That's okay. Do you know that you can rent that home if you something that you really want to keep, like this, I really want to come back to this when I'm done with my assignments. You can keep that home and you can purchase another home. See, there are different things that you can do. So the program is designed to work with your unique situation and with that in mind. So there's a lot of things you can do. I hope that helps. This is just the introduction. And I just wanted to say, it is a benefit that you really would need to take advantage of. It does, if you have a lot of money, obviously you don't need it, but it's nice to know that it is available for you to take advantage of. So I hope that helps. I'll see you next week where I'm going to be going into the loan itself and also explain a little bit more how it will work for different people if you're relocating and different things that we can do. So take care. Happy Veterans Day in advance, and I'll see you next week in Think Beyond the Keys.